What's going on YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today's video, I'm looking at a trade on Matic and I want to show you how you can stack Confluences together to give yourself the absolute best trading opportunity. Stack the cards in your favor. This is what you want to do on every trade. And I'm going to show you the steps I use to make sure that I have good Confluences so that in trades you have the highest winning percentage as possible. Now again, nothing is going to win 100% of the time. There will be fake outs, there will be moves to get people out of the market, and there will be news events that just flush trades the wrong way. So please understand that this is just getting the odds in your favor the most possible, but I feel like this is a move that could break at any point, either while I'm making this video or shortly thereafter, so I wanted to get it out quickly while I was actually charting this up. So right now I'm on a naked chart with just RSI on Matic on the hourly chart. What I see is that we had a high, a low, a lower high, a lower or a higher low, and another lower high, and then we dumped down to actually hit a double bottom type look on this. What I am seeing here is I'm going to go from this point high with a Fibonacci level or Fibonacci retrace tool down to this point low. I want to lock this in place, and you see that the price action has gotten stopped at the 50% retrace. 50 and 61.8 are your best zones. That's why I made them different variations of the gold or bronze or whatever. They are considered the gold zone. That's where you want to look at for a retrace if you're looking to trade with the trend. Now obviously this is still in a downtrend, so the trend, we're looking to trade with the trend. We're trading a pullback of the trend. You also have a hidden bearish divergence from this point here to this point, and you can see the level of RSI, 51 RSI here, up to a 68 here, much higher RSI, much lower price. There's a hidden bearish divergence. Now here's the cool part too. You have your hidden bearish. Now you zoom in a little bit, this little peak difference here, I'm going to change this color to, change this one to orange. You have a regular bearish divergence here testing the 50% line. So now you have the price went up, but there was no strength in the move, and now price is starting to fall. So you have hidden bearish divergence, the 50% fib line acting as a resistance. And you already know the trend. Now let's add in EMA. Now the 21 EMA price has crossed under, but you see the EMA is starting to hook down. It's starting to come down. Price needs to get below the 50. But that's just something that you can use or not use. But there's one more key I want to show you here that is often overlooked, and this is probably one of the most overlooked price action tools that you can use. Inside bar consolidation. You see this long, this strong buy candle here. Everything after is an inside bar. Everything else fits inside this bar. So you can take this, and this is your zone to break out, to enter a short position or even a long position, a long continuation, if this goes up to the 618 or the 782 or 786. I am fairly certain that everything is indicating that this will be a downward breaking move. So I am very much looking to take this as a short position, looking to take a short once it breaks below this level here, once it breaks below 8406, and that should in turn break it below the 50 moving average, and then you have the 50 as a resistance, the 20 as a resistance, and you have the 50% Fibonacci level as a resistance. So what I would do in this trade is take a short position. Let's say we take a short here, and we have our stop loss here at the top of this bar, at the top of the mother bar. So this, the first bar of an inside bar pattern is called the mother bar. And then I would target, my first target would be here. My first target would be this level where the price got hit multiple times and didn't wick down. And my second target would be the very bottom of this recent low. Now if you get to that point, you can also kind of cycle out. You can take out 50% or 75% and then try to let it run, because there's a good potential this makes a lower low. You definitely want to be conservative initially to take your first profits out here, but you can also stagger out profits And you can use moving averages coming down as a level of trailing stop loss. So keep that in mind, guys. I just want to show you this potential trade setup. There's a lot of confluences. We have a resistance at the 50% Fibonacci retrace level, one confluence, a hidden bearish divergence, 2, a regular bearish divergence, 3. The RSI is falling now below 50, so below 50 is where I like to take a short position. And we have the moving averages rolling over, and we have an inside bar set up that typically at the top, at a resistance level, an inside bar set up typically triggers a reversal. So with all that being said, guys, I hope you got something out of this video, short and sweet. If you like more of these just trade setups where I'm seeing them as I go and just giving you all the information I have, shoot me a comment. Let me know if you like this style video. As always, until next time, peace.